What occurs when a nation becomes disillusioned with the US economic system? African countries are reclaiming their gold and money held in the USA and repatriating it to their own countries. This poses a significant challenge to the US economy. Can this trend be halted? Free nations have already made this decision, and many European countries have followed suit. This puts the US in a delicate position. However, the question remains: why are African nations taking this step? In recent times, a noteworthy and consequential trend has emerged as several African countries find it necessary to repatriate their gold and foreign reserves from the USA. Led by nations such as Nigeria, Ghana, and Cameroon, this movement signifies a significant shift in global financial dynamics and reflects a broader realignment of geopolitical relationships. The significance of this development cannot be underestimated. For African countries, repatriating these reserves is not merely a financial action, but a powerful assertion of economic sovereignty and self-determination. The recent trend of African countries reclaiming their gold and foreign reserves from the USA is situated within the context of profound geopolitical shifts and financial uncertainties. This move is not an isolated incident, but part of a broader global pattern driven by geopolitical tensions, economic instability, and a reassessment of trust in major financial institutions. Over the past few years, the global geopolitical landscape has undergone dramatic changes, marked by escalating tensions between major powers and a series of financial disruptions that have eroded confidence in traditional safe havens. One pivotal event that has influenced this trend is the economic sanctions imposed on Russia following its invasion of Ukraine. The seizure of Russia's sovereign wealth funds by Western countries served as a wake-up call for many nations, prompting them to reconsider the safety of their assets held abroad, particularly in the USA. This incident highlighted the potential vulnerability of foreign reserves stored in a country to political leverage or sanctions. For numerous African nations, the risk of their assets being frozen or seized due to geopolitical tension is one they are no longer willing to bear. As a result, there has been a revaluation of where and how to secure national wealth, leading to the decision to repatriate assets. While mainstream media often focuses on larger geopolitical events, there are numerous significant developments that go unnoticed but have profound implications. For instance, financial crises in various parts of the world and escalating debt levels in both developed and developing countries have created a volatile economic environment. Countries with significant reserves held abroad are particularly concerned about the stability and reliability of these funds amidst such instability. Furthermore, there is a growing movement towards economic nationalism and self-reliance. Countries are increasingly looking inward, striving to build resilient domestic economies that are less dependent on external forces. The shift towards repatriating gold and foreign reserves by African nations is a response to the unpredictable nature of global markets and a desire to insulate national economies from external shocks. It represents a step towards economic self-sufficiency for these countries. Let's explore the actions taken by specific African nations, starting with Nigeria. With approximately $32.15 billion in foreign reserves, Nigeria has made significant strides in repatriation. This decision is motivated by concerns over the long-term security of its assets and the aspiration to strengthen its economic sovereignty. Nigeria's move is also influenced by its ongoing efforts to stabilize its currency and enhance the effective management of financial resources. By reclaiming its reserves, Nigeria aims to reduce exposure to international financial risks and gain greater control over its economic future. Additionally, this action reinforces the country's financial infrastructure and instills public confidence in the domestic economy. Now, let's turn to Ghana. With around $9.9 billion in foreign reserves, Ghana has taken a similar decision to repatriate its assets. By holding reserves domestically, Ghana aims to utilize these funds more effectively to support economic growth and development initiatives. Moving on to Cameroon, with approximately $3.5 billion in foreign reserves, it has joined Nigeria and Ghana in the repatriation effort. For Cameroon, repatriating reserves is a strategic move to build financial stability and foster public trust in the government's economic management. By holding reserves domestically, Cameroon can better navigate economic challenges and leverage its financial resources to promote national development. The actions of Nigeria, Ghana, and Cameroon are indicative of a broader trend across Africa. Other countries are closely observing these developments and are inclined to follow suit. This collective movement towards repatriation aligns with the larger shift towards economic sovereignty and regional cooperation in Africa. African nations are increasingly collaborating on economic initiatives, exemplified by the African Continental Free Trade Area, which aims to establish a unified market for goods and services across the continent. Repatriating reserves allows African countries to better support these regional initiatives and build a more integrated and resilient African economy. While each nation may have specific reasons for their actions, the mutual motivation lies in the desire to assert greater control over financial resources and reduce dependence on external actors. This multifaceted decision reflects the evolving priorities and aspirations of African nations in managing their economic futures. African countries, including Nigeria, Ghana, and Cameroon, recognize the importance of safeguarding their financial assets to foster economic stability and sustainable development. By repatriating their reserves, these nations aim to mitigate risks associated with storing assets abroad, such as currency fluctuations and geopolitical tensions. In addition, repatriation enables African countries to diversify their investment portfolios and allocate resources more effectively to support domestic development priorities. Holding reserves domestically allows these nations to mobilize funds for infrastructure projects, stimulate economic growth, and address social needs, contributing to long-term prosperity and resilience. The decision to repatriate reserves is also influenced by political and security considerations. African nations, like many others globally, are increasingly cautious of the potential risks associated with storing assets in foreign jurisdictions. By bringing assets back home, these governments proactively protect national wealth and assert sovereignty over financial resources. It is a step toward minimizing external vulnerabilities and ensuring autonomous control over their economic futures. This move signifies not only economic pragmatism, but also independence and autonomy on the global stage. Beyond its practical implications, repatriation carries significant symbolic weight for African countries. Bringing assets home represents a powerful assertion of economic sovereignty and self-determination. It sends a clear message to the international community that these nations can independently manage their financial affairs and are no longer reliant on external actors for their economic well-being. Moreover, repatriation serves as a tangible expression of confidence in domestic institutions and faith in the future trajectory of African economies. It demonstrates a willingness to confront historical legacies of economic exploitation and assert agency in shaping a more equitable and prosperous future. Repatriation is as much about reclaiming control over national wealth as it is about reclaiming dignity and self-worth. Considering the global impact, one significant repercussion of African countries' repatriation efforts is the effect on the reputation of the U.S. financial system as a haven for foreign assets. Historically, the USA has been regarded as a stable and reliable destination for storing reserves, attracting governments and central banks worldwide. However, the decision of African nations to repatriate their assets signals a loss of confidence in the security and stability of the U.S. financial infrastructure. This erosion of trust could significantly impact the status of the US dollar as the world's primary reserve currency. If more countries follow suit and repatriate their reserves, it could diminish the demand for US dollars in global markets, potentially weakening its value and undermining its role as a global reserve currency. Such a scenario could have ripple effects across the global economy, impacting trade, investment, and financial stability. The repatriation of gold and foreign reserves by African countries can have significant implications for global financial markets. The withdrawal of assets from the USA could introduce volatility into international markets as investors react to the redistribution of financial resources. This may impact asset prices, exchange rates, and interest rates, potentially affecting global economic activity. Furthermore, the repatriation trend could expedite the process of de-dollarization as countries aim to reduce their reliance on the US dollar in international trade and finance. This could lead to the diversification of reserve currencies and the emergence of alternative financial systems, challenging the dominance of the US dollar and reshaping the global monetary landscape. Financial institutions would need to respond to these developments by adapting to the changing preferences and priorities of their member countries. Institutions such as the International Monetary Fund, IMF, and the World Bank may need to reconsider their lending policies and investment strategies to accommodate the evolving needs of African nations and other emerging economies. The repatriation of gold and foreign reserves by African countries from the USA is not an isolated occurrence. Several other nations have undertaken similar actions in recent years, reflecting a broader trend of re-evaluating financial dependencies and asserting greater control over national wealth. Examining case studies of these countries provides valuable insights into the motivations, challenges, and implications of repatriation efforts. Venezuela serves as a compelling case study of repatriation driven by economic instability and political tensions. In 2011, the Venezuelan government announced its intention to repatriate gold reserves held in foreign banks due to concerns about the safety and security of these assets. This decision was influenced by escalating political tensions with Western powers and a desire to assert greater control over the country's financial resources. Despite facing logistical hurdles and legal disputes with foreign banks, Venezuela successfully repatriated a significant portion of its gold reserves, demonstrating a commitment to economic sovereignty and independence. Several European countries have also pursued repatriation efforts in response to financial uncertainty and geopolitical tensions. In recent years, countries such as the Netherlands, Germany, Switzerland, and Austria have announced plans to repatriate gold reserves from foreign vaults, including those in the USA. These actions reflect concerns about the stability of the international financial system and a desire to reduce dependence on foreign institutions. Repatriation serves as a prudent risk management strategy for European countries to safeguard national wealth in an increasingly volatile global environment. The European experience underscores the significance of diversification and risk mitigation in managing national reserves. It also highlights the role of public sentiment and political pressure in driving repatriation decisions, particularly during times of economic uncertainty and geopolitical instability. Argentina provides another instructive case study of repatriation driven by financial disruptions and economic challenges. In recent years, Argentina has faced significant economic volatility, including currency devaluation and debt crises, prompting the government to reassess its financial strategy. In 2012, Argentina announced its plans to repatriate a portion of its gold reserves from the USA. The decision was motivated by concerns about the safety and security of these assets and aimed to strengthen the country's financial position while reducing exposure to external risks. The case studies of Venezuela, European countries, and Argentina provide valuable lessons for African nations embarking on repatriation efforts. These examples emphasize the importance of political stability, effective governance, and proactive risk management in facilitating successful repatriation. Furthermore, these countries' experiences highlight the broader implications of repatriation for global finance and international relations. As more countries assert greater control over their financial resources, the balance of power in the global financial system is likely to shift. reshaping the dynamics of economic cooperation and competition. African countries undertaking repatriation will face challenges from external pressures, such as foreign governments, financial institutions, or other stakeholders with vested interests in maintaining the status quo. These pressures could manifest in the form of economic sanctions, financial penalties, or diplomatic isolation aimed at dissuading African nations from repatriating their assets. To withstand these pressures, African countries must demonstrate resilience, resolve, and unity in pursuing their repatriation objectives. Building strong alliances with like-minded countries, diversifying economic relationships, and reducing dependence on external actors can help African nations assert greater autonomy and sovereignty over their financial resources. Another challenge associated with repatriation is the potential impact on currency markets and financial stability. The sudden influx of repatriated assets could put pressure on domestic currencies, leading to exchange rate volatility or inflationary pressures. As African countries repatriate their assets from the USA, they are likely to diversify their reserve holdings to reduce risk and maximize returns. This trend towards diversification may involve reallocating assets across different asset classes, such as equities, bonds, real estate, and commodities, in order to optimize portfolio performance and enhance financial resilience. Moreover, African countries may explore opportunities for strategic investments in sectors critical to long-term economic development, such as infrastructure, renewable energy, and technology. By diversifying their reserve holdings and investing in high-impact projects, African countries can strengthen their economic foundations and create sustainable sources of growth and prosperity. Looking to the future, the success of African countries after repatriating their reserves from the US will depend on various factors. Collaboration between African countries and the international community is crucial to support and facilitate repatriation efforts. This requires addressing the root causes of economic inequality, promoting inclusive growth, and creating an enabling environment for economic empowerment and self-determination. Additionally, upholding the principles of sovereignty, solidarity, and mutual respect in international relations is essential for fostering a more equitable and just world order. With these concerted efforts, African countries have the potential to achieve success and unlock their full economic potential after repatriating their reserves from the US. With the recent decision to repatriate gold and foreign reserves from the US, Africa is poised for success. This bold move signifies a strategic shift towards economic sovereignty, resilience, and self-reliance, setting the stage for numerous positive outcomes. There are several reasons why this decision is propelling Africa towards success. Firstly, repatriating reserves is a strong assertion of economic independence. African countries are taking control of their economic destiny by bringing their financial assets back home. This move reduces their dependency on foreign financial systems and enhances national security concerning their reserves. By holding reserves domestically, African nations can invest in their financial infrastructure, boosting confidence in local banking and financial institutions. This, in turn, encourages citizens and businesses to engage with domestic financial systems, stimulating economic growth. Furthermore, this decision has the potential to foster stronger regional financial cooperation. As countries like Nigeria, Ghana, and Cameroon repatriate their reserves, they can collaborate on creating a more integrated and resilient financial system within Africa. By diversifying away from reliance on foreign financial hubs, African countries are better insulated from global financial shocks. The instability witnessed in global markets in recent years serves as a reminder of the risks associated with holding significant reserves abroad. Repatriation mitigates these risks, contributing to greater economic stability within Africa. The repatriated reserves can be strategically invested in critical sectors, such as infrastructure, healthcare, education, and technology. These investments are essential for sustainable development and can drive long-term economic growth, laying the foundation for a prosperous future. Overall, Africa's decision to repatriate its gold and foreign reserves signifies a transformative step towards economic empowerment. By asserting control over their financial resources, African nations are positioning themselves for success, fostering resilience, and bolstering their prospects for sustainable development and prosperity.